Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Lots of major headlines to start off this week. Yesterday, we had the drama with the lawsuit in the Fed. We have the merger between Gemini and Siri, or Apple and Google, which that one again is a pretty wild one. Had the December core consumer prices that came in at a rise of 2.6 of the annual rate, which was less than expected. And then one headline that I've been excited to discuss with Rob is that Boeing actually outsold Airbus for its first time, and I think since 2018. So lots of exciting topics to cover this session, and of course, very excited to interact with you all. So let's go ahead and kick off. Rob, you out there?
Hey, I'm Zack. Hey, everyone. Welcome to TradeFinder Live. Hope you're having a good start to your Tuesday or midday Tuesday. It is going well. Yeah, there are awful lot of things to talk about, especially oil and Iran and all the different aspects that are going on. But let's take a look specifically at where we are on the S&P at the moment. And you can see that we are trying to break above that ascending triangle. Yesterday, we had almost the ideal confirmation day scenario. We got pretty close to it, as you can see from these bars. And it is technically a confirmation day yesterday. When I said ideal, the ideal confirmation is when the close exceeds the high of the previous day. And you can see it was right there. So right at that level, but nonetheless, a solid confirmation day on the breakout, tiny bit above the 10-day moving average. So we're kind of treading water a little bit, and the market has a lot of news to try to digest. Had the CPI report that came out that was pretty much in line, so nothing really too significant about that as far as affecting what the market's going to do. And then from there, all the speculation regarding Greenland, Iran, all the same things that we've been talking about for a while seem to be holding just a little bit of a lid, but not too significant. So on the markets, we did break out. Coming down and looking at the volume underlay down here, you can see that it was the good kind of volume. And the reason I say that, if you haven't heard me say this before, is when you break a point of resistance, you don't want to do it on a big, massive volume spike, because then that tends to be, all right, everybody that wanted to buy bought. So who's left to buy? And then we kind of retrace back down. But when you just have good, solid, intermediary volume, those are the ones that tend to have a higher percentage chance of holding and carrying through. So you can't say anything other than, at least at this point, it's a good breakout on the volume that you'd like to see. And how far can we go from here is what we'll be trying to figure out. One of the things that I wanted to look at, and I mentioned this yesterday, was if we continue this move, would this 5 just move over, or would it possibly relabel to a 3? And as you can see, the 5 basically just moved over. So with that, we will continue to march in that wave 5 to the upside scenario. And then if we go and take a look at the Dow real quick, looking at the DIA, you're going to see a quite different scenario here, where we have a 142% extension there on the DIA. So how far can that go? And that was another one that I was talking about. If we continued higher and broke out, would this 5 move over from a couple days ago, last week, to here, or would that consider relabeling to a 3, especially when we're at 142% extension? That's getting a little bit long in the tooth. And I've been mentioning that big round number of 500s right there for the DIA. How far past that can we go? But it seems likely we'll at least get there. The tractor beam effect, we're in there moving towards that 500 level. And then we'll just have to take a relook. If it stays a wave 5, it's getting pretty extended. Again, I mentioned yesterday that over my years. I have seen a few times, I guess we could go several, where the extension level went to the 261.8% fib level, but that is definitely rare. That doesn't happen very often. So um, it's less likely that we power up to that level if this 5 doesn't relabel to a 3. Still possible, though, and we have to keep all possibilities in mind, just knowing that the percentage chance is lower in that scenario. Now looking at the Qs, we go over to the Qs, watching this triangle very closely. Nice symmetrical triangle, trying to come up with some sort of a strangle to trade that, and there really wasn't as far as viable option trades. It's either way too expensive, too much risk in it, or some of the ideal ETFs that I've found for it weren't optionable. So we just wait, and we're going to get pretty close here to pulling the trigger on a directional trade out of the Qs because once again, we got the confirmation day. Note as I blow up those bars again here, not the ideal confirmation, but still technically a confirmation. So there are a couple things looking at on the Qs. One, we needed to exceed this breakout attempt from last week. So we exceeded that. We got a nice closing high here. And then on the confirmation day yesterday, we did close above yesterday's close. So that's where it came to a technical confirmation day. But we didn't close above yesterday's high, which would have been better. So on both the S&P and the Qs, yes, technically qualify as confirmation days. Neither one was the most ideal scenario, but for now you go with the data that you have, and we keep looking forward for these moves. Again, like the S&P, a little bit above the 10-day moving average, so kind of having a pause today. The wait for staying there, and as I've mentioned numerous times, it does appear we're trying to confirm this breakout up here. We had the confirmation day, but still a little bit early to get caught into picking direction, but it may be very close. We'll see if there's any sort of a reversal today. If not, very soon you could see a directional trade come out on the Qs for those of you that are EO subscribers. So now let's go and take a look at the small caps, the IWM, which has been performing really, really well. Outside of the movement in the interest rate market, the IWM still powers higher. And I've talked about this a lot as well, that borrowing the Fed's dual mandate slogan, there's a dual signal from the IWM, I guess would be a good way to put it, is the fact that, yes, it's the most rate sensitive and follows along with what goes on in rates, but it also is an indication of risk tolerance in the markets. So if the market is in a risk-on type environment, then the IWM tends to perform well. It's the high beta names. And then if you're in a risk-off type scenario from the markets, then especially if rates are elevated at all, that's the one the IWM struggles the most. But it's not struggling right now. You can see that we have this pretty vertical move. That makes me a little bit nervous. That's almost too vertical there on this movement up and the separation from the 10-day moving average. So I would be less inclined to do anything with the IWM at this moment. And then we add in this zigzag pattern within the IWM where we had a B wave correction right at the 38.2% fib level, right on the 50-day moving average. Pretty classic place to find support, and then moved up. Remember, when you have a 38.2% B wave correction, you were looking for a 61.8% extension. And we're almost there on the high today. We almost touched the line. So looking a little overbought is my point on the IWM. So might be a little patient there and wait for another opportunity to see if we do look for an extended C wave here where we move up to that 100% extension level in that zigzag. So pretty nice move over the past 2 weeks here, week and a half on IWM, but I would be a little more cautious at this point. Now let's go to the bond market. Prices pretty stable here down at the bottom of this zigzag pattern here. where we had that perfect 50% corrective move. I've been commenting that I think this is a textbook zigzag, one that Elliott might have put in his works, his writings, because perfect 50% B wave correction yields an expectation of 100% extension. Not only did we go there, we've been pegged there ever since we got there. It was just like sticky paper. We're sitting here right there at that 100% extension. The other point that we've been making over the past few weeks is this head and shoulders pattern that exists on TLT. We have not gone low enough to satisfy the rules on a head and shoulders yet. If we do break below this 100% extension and start moving down in price, then that means yields and rates are moving up. Remember, TLT is prices on the 20-year, and prices and yields move inversely. I know for those of you that watch week in and week out, I repeat myself a lot, but we always have new people. So it's important to make sure that we, or that I go through the rules for everyone that hasn't heard them incessantly like the regulars have. So forgive me for the repetition, but hopefully you understand. So the extension here right at the 100% level is what we'll continue to watch to see if we break that level, then the 161.8%, the extended C wave in the zigzag, brings us pretty much to where you would expect the market to go down, breaking the neckline of the head and shoulders pattern. So you're probably aware in head and shoulders, you measure from the neckline to the top of the head, and however far that is price-wise is the expected price movement in the opposite direction once you break below the neckline. And so you can see it's, rather large movement there, and that gets us pretty close to this fib extension level. If we break that, and nothing works 100% of the time, head and shoulders don't either, so it's a good pattern. Always interesting when you see it. Kind of a complex pattern, obviously, but we'll wait and see where we stay in the bond market. But so far, so good. And even with the CPI report today, which was kind of tame, but no real significant movements. The jobs report, CPI, nothing seems to be affecting it. The Fed lawsuit over the weekend. Might have thought that we would have a pretty rocky start to the week in the bond market, and it's been anything but. So pretty stable, which is helpful. Allowing the S&P, Qs, et cetera, to make their breaks higher. But we still have to respect that these patterns exist, and the possibility of a pretty good move down in price and therefore up in yields might be pretty challenging for the equities markets to move higher if that does occur. And then over to the TNX, the interest rates on the 10-year, different pattern, obviously, because this is showing rates, but this resistance level here on the TNX right at 42, can we break above that? Can we break above that level? If we do, then that would coincide with TLT going down in price. So again, since this is rates, if rates go up, then this chart goes up. Sitting right at this wave 4, it's a solid wave 4 right at 50%, and you can clearly see all of the resistance that exists right here. And Rick Santelli, some of the people that I listen to in the bond market are talking about if we break above that, then there'll be some short covering there, and you could see rates kind of make a bit of a short-term spike up if we were able to take that out. So trying to hold the rates in that area, I think, is what a lot of bond traders are hoping for. But we'll continue to watch this very closely because it could change the nature of how the equity markets are performing if there is some sort of a big breakout in rates across the yield curve. Looking at the dollar, which is very cooperative, had a little tick up over the past couple of trading days, but back down a bit today, which is nice, staying in the Goldilocks channel. Not much else to say about the dollar that you haven't heard me say 1,000 times, so just leave that and move on. We'll take a look at the VIX real quick. Just when it looked like maybe we were going to start heading down yesterday, that we're going to start heading down towards 12.5, and we had that nice break lower in the VIX yesterday. The 15 level has been the support for so long, sticky level. Could we break below that and start heading down towards 12.5? Well, right back up today, so a little more volatility. So that 15 level is just an absolute magnet on the VIX. Just can we move down to 12 and a half? We'll see. You would think that if the market continues to break out, the S&P continues this breakout, et cetera, that we might see a drift down and actually test that 12 and a half level. But every time it looks at it, I joked yesterday that in golf you had an expression when you couldn't make a putt, your ball's afraid of the dark. It doesn't want to go down in the cup because it's afraid of the dark. And it just seems like the VIX has some fear of going down to 12 and a half. It doesn't want to do it. Every time it makes an attempt, it turns and goes back higher. Talking points, interesting to talk about. Very difficult to trade the VIX in these days, in my opinion. I know some people still do. I don't. I just look at it for indications and talking points, so more general information than from a trading standpoint. All right, let's take a look at where we are in the metals market. Gold had a nice break higher yesterday, consolidating a bit today, which is good because we don't want to see things go too vertically because we get this scenario over here again. You know the rule, what goes vertically up oftentimes come vertically back down. And even with the run gold had, then it got real vertical. That was when it was set for a corrective phase, which it had, and now it's worked its way back up. A lot more on that 45-degree angle incline here, but now we're getting vertical again. We did it a little bit at the end of December, came back down. Now we're doing it again. So we're getting these choppy moves here in the metals. That's SLV that I talked about with these big intraday bars here, where you had the gap up, gap down, gap up, gap down, just back and forth. But that's interesting enough. But then the intraday volatility, you can see how small the bars usually are on the intraday volatility, the intraday movements of these individual daily bars. You get not only this whipsawing of gaps, but bigger intraday bars. And I mentioned the expression that volatility oftentimes marks market bottoms or market tops. And gonna probably turn and head back down in silver or maybe take off for another run. Well, it's clear which one of those we've done. Silver's taken off for another run. So we just had kind of like this sideways churn here, but a volatile sideways churn, which is unusual. And it indicated that here we go again, another move higher to come. Some real old school people might have actually got caught on the wrong side of that trade because years ago it used to be believed that that was a market top when you saw that kind of scenario. But over time, just with experience, you come to realize that no, you can also get continued runs, and it's just a little bit of a consolidating, platforming a little bit before it's ready to move again. All right, so now let's move into crypto space. We'll go over and take a look at BITB, and talked about this quite a bit over the last couple of sessions, webinars I've been doing. Is that really important to pay attention to this level here on BITB to see if we can break higher here. We keep testing this 50-day moving average, and you can see it's drifting down just a little bit. But can we break above this level? The concern here is that there is a labeled 4. Now it is green, so still active. So the algorithm is not convinced that this is definitely going to be a confirmed wave 4. We could break higher from here. We're only at a 37% retracement, so we could continue to break higher from here. And if we do, set a 4 all the way up to a 61.8% corrective level. But for now, for those that are in crypto space, it's worrisome that we could potentially start a wave 5 down. So if Bitcoin starts to go lower, we will likely see that turn purple at some point in time. But I went through this a lot yesterday, and I want to today as well, because there's a lot of misconception on how the labeling works. So this is a potential 4. It's green because it's still active. The algorithm feels like that may not hold, but it's good enough that you at least give it a little bit of a notation. If we start heading down, then maybe that 4 turns purple. Um, so where the algorithm feels like that 4 is in place. But technically within Elliott Wave, a wave 5 would not be confirmed until the wave 3 low is taken out. So it becomes qualified, but there's a difference between a wave being qualified and confirmed. And that's where a lot of people seem to get tripped up. And so if we start lower here, then we get maybe that turns purple. And then we have where the wave 4 is confirmed. And then we're looking at a qualified wave 5 down and waiting for it to get. But you don't wait to trade it. Well, you can, but it's a more conservative approach, waiting for the wave 5 to be confirmed. Because as you know, if you wait for that, it's all risk reward. If you wait for more confirmation, then you miss some of the move. So we'll talk more about that. I don't want to elaborate too much longer because I have made this point recently, but I just wanted to be clear here as well. So we're watching the wave 4 level on BITB. Then we go to ETHW, Ethereum, and look at this pretty well formed triangle here, getting better than where it was. I still don't like that there's a lot of empty room here. I like in the symmetrical triangles where you have a lot of touches on both the lower high and the higher low trend lines. And here we have this big gap. So it's not the most classic, but it's not that bad either. So it does look like Ethereum is getting ready to break out here, and we'll just have to wait and see which direction that it moves. Obviously, if it starts breaking down, then we're likely progressing lower on that wave 5 out of Bitcoin as well on the BITB. So still keeping an eye. I know a lot of people are looking for big things out of crypto this year, and we'll see if that materializes. Now let's move over and go into energy, natural gas. Man, very difficult market to trade natural gas moving forward throughout the end of last year, and now kind of holding suit this year as well, as far as this zigzag pattern to the downside, trying to hold at the 61.8% level. Looked like maybe last week we're going to march on down here to the 100% extension, and it still may do that because we had a 50% B wave correction. So this stop here might be momentary at the 61.8% extension, and then we'll see if we can continue lower down here to the 100% level. But for now, just this kind of catch the falling knife scenario here on UNG. Where's the bottom going to be as we move lower? And it just doesn't seem to be a catalyst anywhere for where we can go on the natural gas. And I know the chart's pretty messy. We can clean them up a little bit now by taking some of this other stuff off and make it a little more, a little easier to see. And there we go with where the chart is at this point in time. And I'll put that downward zigzag back on because that's the pattern that's in play at the moment. So there we go. And then do we make it down to the 100% extension? So, all right, let's move into talking a little bit about the case studies that we've been doing. We'll be doing one today as well. Oh, I forgot oil. Sorry about that. Let's get oil in there and then we'll move into that. But obviously with the unrest over the Iran situation, Venezuela still in the news as far as what's going to happen there. And I think it's going to take some time before that ever sorts itself out as far as whether or not the oil companies want to go in there or not. I guess President Trump got upset at the CEO of Exxon when he made the comment that he thought Venezuela was uninvestable at the moment. So it caught his ire there. But we'll see what the plans are. But it's going to be well into the future before it affects the oil market. There was a thought that, and there was a quick move down over that when thought maybe there'll be more supply coming onto the market. But now we're looking at any sort of action with all the unrest in Iran, military action. Could that disrupt oil coming out of Iran? And then all of a sudden, instead of where we thought Venezuela might add supply to the market, the situation with Iran might take away supply on the market. And so oil's kind of bouncing around right now. And one of the things I talked about, and I think it was yesterday, Zach, let me know if I didn't say that yesterday, but I feel like it was. It might have been over in the U.S. market update on the weekend, but I made the comment that everyone I know uh, and people that I don't know that I've heard and listened to and read about are all bearish on oil. I've yet to hear the person that thought oil was going to go higher this year. Now, I'm sure they're out there, just not in the circles that I stay in. And that tends to make you nervous. When everybody's on one side of a trade, it's just general market psychology. When everybody's on one side of the trade, the path of least resistance is to go the other way. And maybe that's what's going on with oil right now. Even the AI had it coming down a little bit lower than where it did, and it's bounced back up. So initially, you get a bounce back, you go right to the point of the triangle. Okay, that's classic triangle breakout rules. You break out at some point, you're going to come back and test the point of the triangle, just like with gaps. You don't know if they're going to get filled immediately or take some time. Same thing with testing the breakout of a triangle. In this case, it was relatively quick. So we're like, okay, we're back here. We followed that. We've completed that rule. So now what? And we get the gap up today. And that's where we are in oil. So can they get some follow through? We are a little bit overbought today with the separation from the 10-day moving average. But this could be a momentum run if we start to get, more information on what may happen, if anything, with the situation with Iran. But that's what's driving oil right now. All right, so I did want to show you in the case studies, and Zach's going to come in and show us when we post our case study consideration for today. They are on the social media aspect of the website. And we had GFS has been in there for a while, and our target was up to about 42. And as you can see on the high today, we basically hit that. So we're going to be looking to exit that position and then move forward with other case study considerations. Did I not ever turn the video on, or did it go off?
No, it was on. It just switched off for some reason. It was odd. You're back though.
Wow. Zoom has just been really acting strange over the start of this year. It seems like every day we're having some sort of an issue with it. It's weird. So anyway, I just wanted to show you that one. That one will come off the listing in the ideas section of the social media aspect of the Hub platform. And so we will look for a case study consideration today as well. But before we do, let's get to some questions. So we'll open up the Q&A, Zach, and then we'll go from there.
Alrighty, sounds like a plan. Let's get right into it. I got a question here for you from JJ. Question on ATI. I got out of the trade because though the stock was stepping up, it was lingering at the 100% fib. Is it common that stocks don't generally move up past the 100% level in such cases?
Well, more often in the wave 3, you can extend. So the fact that ATI is in a wave 3, you can get extended movements. It does happen in the wave 4 as well, but not nearly as often as it does in the wave 3. So it's almost a toss of a coin in a wave 3 if it's going to stay at the expected fib level, like in a zigzag, as you mentioned, or is it going to go to the extended level? It happens that often that it's almost like 50-50 that you could get that extended level. But don't ever feel bad about taking a gain. And I know we always want to hit, everybody wants to hit market bottoms and market tops or trade bottoms and trade tops, but it's not realistic. And we can easily Monday morning quarterback and drive ourselves crazy. But I've always tried to share the rule that helped me a lot when I was first trading, because it is easy to second guess yourself and gosh, I wish I would have stayed. Gosh, I should have got out. All those things, and we're always wanting to be perfect, and nobody is, and we're going to make mistakes, and we're going to have losing trades, and all that. It's just a part of trading. But if you're happy with the gain at the time you take the position off, then don't second guess yourself there. Now, with that said, yeah, it's okay to go along and like the question you asked, if it hits the fib level, is it normal to stay there, or is there an expectation that maybe it moves? So I'm not saying that we don't be content with the position that we took off and the profit that we made and still try to learn something. So we might improve our decision or make something slightly different the next time. So I'm not saying that. I'm not saying that we don't still want to learn and move forward. Um, but yeah, nice trade. And that's the answer, is that in the wave three, you can get that extended move a lot of times. And so maybe consider tightening a stop rather than a complete exit, and then seeing if it moves a little bit further. If it does, then you're there. And if it doesn't, just let the market take you out through the stop. It's one of the few times a scenario like that where I am in favor of putting physical stops in. Most of the time, I don't like physical stops because the market makers can see them, and it's just like, you know, hanging or low hanging fruit to the um, market makers that can come in and execute those trades just so they get paid. But anyway, that's the answer. I'm babbling on here. Let's move on to the next one.
No worries. Next up, we have Maria. AMD having FT day and CC is 90. More patience needed, or is this an entry? And then I got another follow-up question for you.
Yeah, 225 has been the area that I've been watching for on AMD. Felt like it was kind of just wait and see mode. I think we talked about this Thursday night as well, last Thursday, that need to put in this lower trend line here. So we've got this trend channel right here on AMD at 200 and 225. And when it's that tight of a trend channel, even though oftentimes I will give both an aggressive and a conservative scenario for whether or not you want to place a trade or not, in this case, you just really, with all the major moving averages together, the prudent thing to do is just wait. Wait until it breaks either above 225 or below 200, because I think there's a sizable move either direction. So again, a lot of consolidation right here, pegged to 220. And if we break 225, there's no resistance until we hit that wave three high up around 270. If we break below 200, there's no support until we come all the way down here at 175. So basically, it's 275 or 175 is coming out of AMD. It's almost a scenario where you consider a strangle on it if you wanted to do anything, or just wait and let it actually break out. So you can see here that we gapped up back in October from 175 to 200. So there's nothing to stop it. So if we break below 200, be very surprised if we don't hit 175. And if we break above 225, be very surprised if we don't make it up towards 275, at least to this wave three high. So I think there's no reason to try to guess right now, because there's plenty of movement in both of those potential scenarios. So let's just let AMD tell us which way it's going to go, and then we can trade accordingly. I think that's the prudent thing to do right now.
Thanks, Rob. And then a follow-up question from Maria is on Palantir. PLTR retracement would be about 125. Do you think it goes that low, holding the 175 support? ADX and CCI not overly helpful, no divergence in the neutral range, long PLTR now.
Yeah, you're getting a pretty good triangle here on PLTR, and I haven't looked at a strangle on this one, but it's probably too expensive. I think at this point, we can take some of these other lines off and make the pattern a little clearer to see. And where it looked like maybe we were having a bit of an ascending triangle formation, I think the more accurate scenario now is that we have a symmetrical triangle formed here, right through there, and then bringing this line up here. So it's pretty large in size as well. So with that, we'll take a look and see if we get some sort of a further breakout move on PLTR, and there's going to be plenty of room to trade this. So the mouth of the triangle is 150 to 210, so 60 points. So I just think, Maria, that this one's just ready to break out, and very similar to what we just talked about with AMD, although a different pattern. And that one's in a sideways channel. This is a symmetrical triangle, but they both look like after a breakout, there's plenty of room for them to go. So I think we just stay patient here on Palantir, let it make its breakout move, or maybe even I'll look at a strangle on this, but it does seem based on the volatility in Palantir, et cetera, that the options are probably too expensive, at least from an implied volatility standpoint, if not overall. But I'll take a look and see. And then you said the DMI is not helpful. Well, it's kind of confirming this sideways scenario in the triangle because the ADX is going down, and that's what it's supposed to do when it's giving a signal of trendless. Remember, the ADX measures the strength of a trend, so if it's low, then it should be trendless, and that's what a triangle is. So that's what's going on with Palantir here. And then if we look at the CCI, yeah, kind of meandering sideways. So they're both kind of confirming this consolidation. So, boy, it's going to be fun to watch. Everybody loves this stock, it seems like. And so when it breaks out, it's going to be quite interesting. Again, I will look for a strangle, but other than that, then we'll have to pretty much go with waiting for the directional breakout and trade that direction.
Thanks, Rob. Next up, I have a question here on silver. Can you give your opinion on this news? CME Group is changing its margin calculation for silver, moving to a percent-based system after Tuesday's close, January 14th of this year, to better handle volatility following several prior increases in late 2025 due to sharp price rallies and records. This shift means margins adjust dynamically with price changes rather than fixed dollar amounts, a move designed to ensure adequate collateral, though it may temporarily pressure prices.
I would have to look a little deeper into how much that will actually affect it. I think it's going to affect traders more than it will affect the actual stock or the ETF SLV. But this is kind of coming about because people got really leveraged. And so when you trade heavily leveraged, but you're right, then that's okay. But I think what the exchanges are saying is that they're concerned about the velocity of this move, the vertical nature of the move, and people over leveraging in order to participate in these positions. And they know that when stuff goes this vertically, coming right back down equally as fast is very possible. And when they see the size of the leverage building up, they get concerned, the exchanges get concerned on will margin calls be able to be satisfied in the case of a significant correction in the market. So it's not unusual for the exchanges to make slight changes to margin requirements, leverage percentages, et cetera. They're just tweaking their protection when they get concerned that they see leveraging at abnormal levels. Other than that, I'll have to go sit down and read it myself and see if there's anything else I can add about that. I'll come back next week if there's anything more, but that's at least what I said, part of what's going on. Maybe it's deeper than that, but that's part of it. And the only effect that it has is that it kind of restricts the buying power from people that have to follow the new leverage regulations that aren't already in. So, but you know, when you've got something that's gone that vertical and is so widespread in the viewpoint, I don't know that it's going to affect it that much. What I'm more worried about is you know, especially when you condense the chart, you really get a kind of a good visual of how vertical this move has been in silver. And with people saying that it's nowhere near over and all that kind of stuff, once again, you get nervous when everybody's on one side of a trade, just like the oil thing. Um, this at some point in time, this is going to correct. And it will be a significant correction. Now, that might be way down the road, but it's coming one day because that's very vertical. And it could have happened here, but instead of being a market top, it was signifying volatility and that we're getting ready to explode higher again. So for me right now, we've had a couple positions on silver. We actually managed to get a sideways position on SILJ just for a few days during this consolidation. And then I took it off because it just felt like silver was ready to go again. And boy, that was good timing because then you can see what's happened the next 2 days, the two vertical days, which would have messed up the calendar spread, but it worked out great as it was. But that was a quick in and out for a sideways trade. And I just, for me, you see this and you're like, wow, I'd really like to be part of that. But my disciplines just won't allow me to chase a move like that. So we had SLV, we got out way too early. We had FCX, we got out a little bit early there. But it goes back to that psychology. They were good trades, good solid gains. And, you know, if you want to look back and second guess and say, gosh, I wish we would have stayed there longer, you'll drive yourself crazy in the world of trading. So take your chunk out of the middle of the move and be happy and move on and just, you know, try to have that as the mentality. I don't need to catch the whole move. I just want part of it and then get out and move. And that's the kind of scenario or the psychology that allows you to continue to move forward and be successful and not drive yourself crazy in the meantime, second guessing every move you make.
Well said, Rob. From there, let's head over to VG for Lisa.
VG.
Yes, sir.
Venture Global. Not too familiar on what they do, but from a technical standpoint, breaking above 7 was obviously key. Almost a little bit of a inverse head and shoulders pattern there, upside down head and shoulders confined right into this area. But nonetheless, it's breaking higher, it's breaking above the 50-day moving average. If you've been watching, you're going to know what I'm going to say next is that we're in that area that does have institutional ownership. Likely, I would have to again look at the numbers and see what percentage of the float is owned by institutions, but clearly some. A nice array of buying the green bars there without being extreme. So good sign of accumulation there from institutions. And then the next step is can it make it to 10? Because right now it's above 5, but below 10. So only investment companies with aggressive growth as a registered investment objective can participate in buying this stock. But if it can get above 10, then it opens it up to a whole large potential pool of investment companies that have growth as their investment objective rather than specifically aggressive growth. And so you tend to get big moves once the stock goes above $10 because such a larger percentage of institutional money can come in. And if it can break above 10, then you kind of have to pay attention to this gap right here where we gap down. So I don't know if that was an earnings report or some sort of a bad news event, but it was trading above 10. And then it broke back below it. And you can see on these bars, some institutional selling occurred there. So some bailed out and hasn't been able to recover 10. So I don't know. Gosh, you'd really have to do some research here on how much of the institutional ownership are companies with growth that are probably going to have to sell here soon if the stock can't get back above 10. Or will they come in and buy and support it and try to get it above 10, which maybe that's a little bit of what's going on now, because that's what tends to happen is they will come in and just try to pressure the shorts enough to create short covering and get the stock to rally and get back above 10. So that a lot of chatter there about just this one chart, but from a purely technical standpoint, um, getting above this 7.5 level was key. Getting up to 8, it has a fairly good path here up till 10. Um, and I think that may be, well, what's going on, but that's as much as I can say without any research on the company to get the breakdown of the institutional ownership. But um, perhaps there is room to run up here towards $10 and see. Yeah, it's not an awful DMI, and CCI is in support, and so is money flow. So yeah, I think there's a pretty good chance that it could try to get to 10, and then we'll have to see, because whatever shorts exist, we'll try to make a stand there at 10 again. But if it could break that, then we're probably up here filling this gap at 12.5. All right, Zach.
Next up, we have Jeff. LMND, please, had a nice bump yesterday and is only slightly lower today. Confirmation is 84, the tractor beam range. It had an upgrade by one analyst to 96, but is sitting at the average.
Yeah, so there's a little bit of resistance right there from the AI target. Right there at 90. So take that off again and look right here. We had that wave 3 that barely took out the high from November. And then at the open today, it looked like we were going to provide follow through. So nice breakout day yesterday. And I would really want to see where we close today. That's going to be key. It looked like we had a good start to the day. On the high, it was a little bit above the 10-day moving average. And when you look back, you can see that this stock doesn't vary from its 10-day moving average very often. And that's one thing, as far as that 10-day moving average, 10-period moving average rule that I talk about. There is no rhyme or reason, because people say, well, what percentage movement away from the 10-period moving average is considered, too far? No security in any time frame gets too far from the 10-day moving average. It varies by stock to stock, so you have to kind of go back and look how far on average does this stock get away from the 10-day moving average. You can see Lemonade doesn't get very far away from it at all. And so back to the today on the high, that was about as far as it gets away. So we're coming back down. So I guess what I'm trying to say is maybe this retracement throughout the trading day today is not that negative, but it's also not providing the confirmation day that we want yet. So if we can rally back into the close and close above yesterday's close, and that would pretty much satisfy the better confirming day or confirmation day rule of closing above the high of the previous day as well. Then I think that, yes, the tractor beam up to 100 is clearly in place. The only word of caution is if we do have a down day today on the close, we have to respect the rules. It doesn't count as a confirmation day. We could come back here and consolidate a little bit more before trying to take another run at breaking above it. So the close is very important on the next couple of trading days here on Lemonade.
GNRC.
Generac. Nice move up, and it does seem like the march back to the previous 4 is well underway here. I'll go ahead and take this fib retracement off. Wave 5 ended down here around the 52% level. And with that, 170 should be next for Generac, or right there where the previous wave 4 was. And then based on Elliott Wave rules, then we have to wait and see what kind of pattern forms from there. So it finishes the wave 5. It makes the retracement back to the 4. That's the one area in Elliott Wave where you kind of go on pause and say, okay, what's the next pattern going to be? What's the next impulse move or corrective phase, or what's going to happen from there? Because it completes that cycle of a wave 5 ending and the retracement back to the previous 4. So you feel like that's the likely destination for GNRC, and but then then we have to regather and maybe wait a little bit to see what the next indicated move is.
Couple of symbols from Will for you. First one's going to be Reddit, RDDT.
So nice move up today. And this is kind of, where we go back to trying to break above resistance, and we get up there and then we come back down. This one did have, I'm going to take all this off. It did have a break above this resistance area here, um, and then had confirmation of the breakout, and then came back down and tested the point of the breakout. So when you have a break above resistance and you have a confirmation day and then it still comes down, that at some point can be frustrating because you're like, okay, well, we had a confirmed breakout. Why isn't it running higher? Well, a lot of times, with the old adage, old support becomes new resistance and old resistance becomes new support. It's the same thing. So even when you get a confirmation day, you can come back down and test the resistance level as support. And right now, I agree, Will's holding nicely. Tap the 10-day moving average on the low here. It seems like perhaps this is setting up for another move. The only fly in the ointment on that is that it's going to run into another resistance with this pivot point high here that occurred back in September at 275. So it's got a resistance point not that far ahead, but I would be surprised if we don't see Reddit come up and test that level. The angle of the 10-day moving average, the fact that it's holding support there at 250, all those seem positive for a move up to at least test 275. Was there another one, Zach? Is that what you said? Another symbol?
There is, yeah, and that's going to be Warby Parker, WRBY. So this is just wild, whips from 15 to 30 and back down again, maybe a strangle.
Let's take a look. WRPY, is that it?
BY.
BY, Warby, yeah. This is the glasses, right? Warby Parker.
Yeah, that's correct, yeah.
Um, well, yeah, it moves like crazy. That's pretty volatile. The problem is that's going to be priced into the options. So as far as a strangle, it's likely too expensive, maybe not from a total cost standpoint, but if you look at the IV that's priced into the options, if it were to calm down at all, the position would lose some good value rather quickly as the IV comes out of the options that you'd have to pay for to get in. So that's the reason why we kind of like to get in while it's going through this kind of stuff. Not just this stock, but anyone, when it's going through this kind of consolidation, because all the extra volatility just gets drained out. And then you get these explosive moves and it piles volatility back in. So we would rather already be in it before the volatility spike occurs rather than paying for it afterwards and then having the volatility come back out. Even just this stuff right here is enough to pull volatility out of the options. So you get a big spike up, they inject volatility, especially in the calls. And then when it goes and comes and does this, then that volatility comes out at a very rapid pace and it hurts the uh, value of the position that you're in. So from that standpoint, that the volatility movement, yeah, strangle would make sense, even though I really prefer to do strangles on triangles because you have that consolidation aspect and therefore low volatility in the options. But the movement would be attractive, but I just think it would be hard to make money on because unless you got a real volatile move from here and it was able to maintain that extra implied volatility in the options, but there's a good risk there that you could even get a breakout move and not make money off of it if it's not a very volatile move. But certainly a fun stock to watch, I'm sure. And then perhaps just a directional trade here because we came back to the wave four right at 61.8% level. We're right at resistance on the high today of 30, which is the wave three high. So an aggressive trade here could be, yeah, I think we're going to break the wave three top and we're going to come up here to 32 and a half and get into the middle of the tap box. And if it can't break above 30, then you probably get out. Um, but I think that's a maybe an easier trade to have a potential gain on than trying to test the applied volatility waters with a strangle. And I just look directionally there and see if it can't follow through there and get to the 32 and a half.
All right. I note we are approaching time. Still have a good amount of outstanding questions for you, but I know you need to get to the case study consideration for this week as well. So you just tell me.
Um, let's do two more questions real quick, and then yeah, we need to get to
So,
the case study for the week.
sounds like a plan. So question from Barbara on TTD analysis, as it was one of your picks lately.
Yeah, it can't figure out what it wants to do. We've kind of got it as a quasi strangle at the moment, just waiting for a move one way or the other. Um, it looked like it was going to break higher. It just ran into resistance at 40, and now it's breaking down. And if it can't hold this level right here, it could have a further move to the downside. But you can see it came down there in December, and at that point, it found a little bit of a bottom, rallied up, thought it might hit the 50-day moving average, but it didn't quite get that high. And then coming back down, um, if it breaks this low here, then we will be all in on the downside. But for now, we're going to stay a little conservative with the possibility that it comes down, tests that bottom, and then turns and goes back up. And maybe next time it can break above 40. And if it breaks above 40, then it's going to 45. But, it's got a lot of work to do just to break 40 before we can start talking about 45. So first things first is, does it hold this December low? And if it does, how far can we bounce? Can we get above 40? And that would be a signal to go long. If it breaks below this level, that would be a signal to go short. So we'll just maintain a status quo type of thing in case of a really wild day until we get an indication of one of those two things. So a good question.
Right. And let's go to ONDS.
ONDS. Pretty vertical move to start the year. I'm sure if you're in that one, been happy about that. Nice vertical move. You know what I'm going to say next. Almost a little concerned, but maybe that's a little too vertical on the move, but it's not horrible. It came up and it's consolidating nicely. It's holding above the 10-day moving average. So the backing and filling that I talk about is working well in a sideways manner, allowing the 10-day moving average to catch up. And the nice clean break above the wave three. The only question is how far can it go in the wave five? There's really not uh, a zigzag in here, so that makes it more challenging for me to figure out where that wave five can go. It had a 61% wave four correction, so you would think 100% extension, and 93 was at 15, so a little bit higher than that. So once that wave five got to 100%, maybe that's a point in time to be a little more cautious on it. But it could make a good wave five run. Seems like a little higher, at least. The ADX is still moving up nicely. We're getting a little bit of a tick down on the positive directional indicator, but that's okay because it's having a backing and filling day, and so that is expected. The key that I watch for here, for those of you that may not have heard me say this before, is what's the negative directional indicator doing? So if the positive directional indicator is coming down and the negative's not ticking up, then I don't pay much attention to that movement. But if that's coming down and the negative is ticking up, it could be an indication of some short to intermediate term weakness, and maybe at that point in time we do need to pay attention to it. But for now, I think we just let that play out because if it turns and goes back up the stock, then that positive directional indicator will turn and get back above the ADX, and that'll be all good to go at that point. So anyway, long-winded explanation here. It's acting pretty well right now. So in that standpoint, I would want to give it an opportunity to go up and take out this wave 5 high from yesterday and see how far it can go before it runs out of steam. So yeah, pretty interesting chart. Good looking pattern. Just no zigzag. It would have been easier to figure out if it had a zigzag in it.
Indeed. All right. Well, if we didn't get to your question today, please know that it has nothing to do with the validity of your question. We just only have so much time that Rob is generous to allot a free hour of his time, that is, for this session. So we got to head over to the case study consideration at this point. But if you have a time-sensitive question, please feel encouraged to submit it to support@uotrader.com. I'll put that in the chat, or we will be able to address it next week, hopefully. So back over to you, Rob.
All right, sounds good. And we're going to go to borrow one from the AI search because this has been a pretty hot sector, and to see a symbol from a sector that you know is performing well up on the top of the list is always attractive. I will caution that we are a little bit overbought. Would have been better if we would have done this maybe the end of last week, but setting up this move here, a little bit of a separation from the 10-day moving average. So my point was that we're a little bit overbought, and we have to keep that in mind because when these AI signals come out, for those of you that have the AI signals with the Hub platform, you know that sometimes they run in a momentum run until they hit the target before they go through the backing and filling phase. Other times, right away, they start going through backing and filling, and then they consolidate before they run to the target. And there's no way to know which one's going to play out. So if you try to say, well, I don't want to get in if it's overbought, well, you might miss that one for going all the way up and hitting the target because that momentum run could continue, and then you completely miss the move. So with that, just be aware that a little bit of a retracement over the next couple of days would not be a big deal, not be warranted, and it doesn't change, or not be concerning, I should have said, and it doesn't change our viewpoint that we're probably going to go up and hit 248. So does it run quickly and do it? Does it consolidate a bit first and then go? That's the main question. Nice little zigzag right here. Let's see what that plays out to. But anyway, Zach, this is going to be at ITA, Aerospace ETF, and we're going to look for a move up to 248. Let me just draw this real quick. Well, a little bit exceeds the C-wave target in that zigzag, but we'll see how far it goes.
All right. Very well. I will take over the screen real quick to post that idea. So you should have my screen now. So here we are at a menu view of the platform, everything that this growing platform has to offer. We're going to go up over here to the right toolbar to the light bulb for ideas. And Rob, you stated this is going to be an official idea for this week?
Yes.
All right. So we'll go over here to the left toolbar to create an idea. This one is going to be on stock ITA, as he said. And for the, I did pick the NYSE for that, right? Yeah, just making sure. So what was the target price again on that? My apologies.
248.
248. And the time frame we're looking for?
We'll stay with the 3 months just to give it a little time it needs to correct first.
Very well. So we'll go a quarter out. And as always, we will come back and add a lot more detail to this right after the session concludes. But as we can see, it is now posted and available for you to come in and interact. Just as a quick example, I'll click on this idea below to show, to illustrate what I'm describing. You have the option to agree or disagree up here at the right. And then, of course, to add your comments and thoughts, supporting evidence behind your opinion on the right side here. So we always encourage you to interact, whether you agree or disagree. For those that have been around for quite some time, or our usual crowd, you've heard me say this probably a number of times now, but for anyone that might be new or joining us excuse me, joining us for the first time. I feel like it's always valuable to reiterate that opposing opinions is what makes markets. If everyone agreed, there would be no transactions, no open interest, no liquidity to take advantage of as traders, especially in options. Is if everyone agreed, that would be all buyers, or if everyone disagreed, that'd be all sellers. And as we know, that's not how things work in this world of trading options. So again, we always encourage you to interact and share your opinion, and just always maintaining that considerate overall code of conduct, which I think the Hub platform has been exemplary in so far and continues to do so. So with that, I see we're getting close to about 10 minutes after time, so I'll wrap up my soapbox speech and pass back over to you, Rob.
Sounds good. Now go ahead and take the screen back, and then we'll take a look at the chart one more time. I did want to highlight the fact that the confirming indicators look pretty good on this. Again, my only hesitation is that we're slightly overbought, so just making you aware of that on the entries. So if it starts down immediately, but don't get concerned about it. And the DMI looks really, really good, and so does the CCI. Money flow is just average. It's right in the middle, so it's not really giving a positive or a negative viewpoint. But boy, that's a good looking DMI. So that's it. That's our case study consideration for this week. And I'm going to go post the close of the GFS one as well. And just as another indication, just so you can see, this one took its time getting there as well. So just kind of goes with sometimes those targets run quick and other times they take their time. So with that, thank you for taking some of your trading day to hang out with us. And the president is speaking right now. We'll see how that affects the markets. He's at the Detroit Economic Club, so maybe he'll make some economic statements or whatever that could move the markets. So it's always interesting to watch the markets when he's speaking. For that, have a great rest of your trading afternoon. Look forward to talking